Hello and welcome to BQ Prime. Joining us today is Mr. Karthik Natarajan. He is the CEO of Cyient. He's speaking to us a day after the company's second quarter results, where the DET vertical, the digital engineering and technology vertical, clocked an 1.5% quarter-on-quarter growth in revenue. The EBIT margin was at 16.5%. The profit was up 1.5% to 172.5 crore. The earnings are the first after Cyient DLM, a part of the Cyient group, got listed. Mr. Natarajan, welcome to BQ Prime.
Thank you, Tushar. Good morning, everyone. Thanks for getting us onto this session and appreciate your time.
The pleasure is ours, sir. Just take us through those numbers of the second quarter and what is the impact of the listing listing of Cyient DLM has had on the metrics of Cyient DET?
Yeah, thanks, Tushar. As you would have seen, we decided to have Cyient DLM as an independent company with the board and the management team. And they got into an IPO last quarter. It was one of the best IPOs of the last 12 months. We are really happy with how the DLM got listed. And having said that, the group will comprise of two key components. One is the Cyient DLM, which is a listed company, and Cyient DET, which is Digital Engineering and Technologies. And this was an erstwhile services business. We recoined the term as DET, and which is a short name for Digital Engineering and Technology, which represents the kind of business that we do. And having said that, I think this has been a decent performance given the macro challenges that all of us have seen. And we are happy with the progress that we made with 4 of the acquisitions that we made sometime last year. And all of them have started to get integrated well. The synergies are starting to kick off. We had 2 new logos that were won through the synergies of some of the acquired entities. And we also had reported a growth of 1% quarter on quarter in constant currency. This is taking into account the non-telecom business has grown by 4% quarter on quarter. The telecom business has come at minus 8%, the degrowth of 8% compared to the last quarter, which has resulted in a net of 1% quarter on quarter growth. This is also a steady growth from year-on-year perspective. We have seen a growth of 17.1%, and which has been one of the highest in the industry that we have seen so far. And we are pretty happy with the progress that we made on the revenue growth aspect of it. And interestingly, we also have seen the margin uplift to 16.5%. This is one of the best ever margin that we delivered in the last 11 or 12 years from the DET or the erstwhile services.
So are you also seeing the troubles that the IT services companies are seeing? You are essentially an ER&D company. The IT services companies have complained about a delay in conversion of deals into revenue. You see that the synergies from the 4 acquisitions that you made last year are coming in, but are the deals also converting meaningfully into revenue for you?
Yeah, so I think I don't think we are operating with different set of customers than rest of the IT industry is. And having said that, the verticals we may be operating would be very different. For example, we are not so much focused on BFSI or retail, right? I think that's some of the 45 to 50% of the business comes from those 2 segments for the rest of the industry. And specific to Cyient, we are also not heavily exposed to the high-tech vertical or the ISV vertical. So to that extent, we are protected from what we are seeing from our vertical growth. And we have reported 40% growth in our order intake. I think this is one of the best performances that we had in the recent quarter. And interestingly, Q2 is not seasonally the best quarter. And amongst all the 4 quarters that we see, Q3 and Q4 tend to be higher because of the year end or the new year beginning for many of our customers. And having said that, I think we are seeing momentum from 2 of the 4 verticals significantly, which is led by transport and led by aerospace specifically. And aerospace has seen a robust order intake as well as revenue growth. We reported a revenue growth of 27.5%, which is an indication of how the order intake gets converted into the revenue. And the second one was about sustainability vertical, where we have also seen a significant increase in our order intake, which has also shown a growth of close to 5% quarter on quarter in constant currency, and also roughly about 20% year on year. And but if you look at the combination, including the acquisitions, we have reported about 71% growth in year-on-year for sustainability. So I think those two are definitely the growth engines which are really starting to do well. And we have also seen steady growth from automotive, and which has been one of the key new growth area that we identified about 2.5 years ago. I think that's starting to take off well. We have seen more than 30% year-on-year growth from automotive, and along with semiconductor and healthcare and medical devices, which are starting to play off well.
So you mentioned about the auto vertical that you started a few years ago. How do you see this business growing in the next decade? We know that the car is increasingly being built around the computer. So what do you think is the leg room for growth in this particular sector? Do you think by any chance it can become as big as BFSI?
I don't know whether it will be as big as BFSI, but it is likely to be one of the strong growth vertical for the entire industry. And if you really look at an autonomous car, would need about 100 million lines of code. But with more and more semiconductor coming in, with more and more, the future of vehicles will be defined by software-led. And now you're going to really see connected cars, over-the-air upgrade, making this as an e-commerce platform. So you really want to make car as almost like an iPhone, and how do you think you can really make many of the services can be delivered through the car? And now that's the future that we are really looking at. So it may not exactly be defined as automotive like the way it was defined for the last 100 years. There will be a lot more things that will get integrated to that, whether it is shared services like an Uber and Ola in India, or similar to that in many other geographies. And we will also see many more e-commerce related things which will start getting integrated into that.
Is this your biggest future growth prospect? Do you see this on those lines?
I think we have kind of, sorry, Tushar, and we have kind of really said we want to really pivot the company on technology-led future. I think that's one very clear directional view that we have taken, which is flanked by three key pillars of tenets of this growth. And one is by autonomous world, which is led by robotics, software-led growth with cloud, AI, and cybersecurity. And we call them as an industrial AI. The second is about the sustainability of the planet, what we need to do on decarbonization, energy transition. And third pivot is about digital engineering and R&D. So all three will play an horizontal role. While it could be for automotive and mobility, it could be for transport, it could be for mining. Because when we are talking about autonomous operations, and this is likely to have larger impact for many industries, and whether it is about autonomous mining, autonomous construction, and autonomous plant engineering, and it will include autonomous mining operations. So you will find it is going to have robotic surgeries. And so when you are talking about autonomous operations, it cut across many verticals. And we are pivoting on four growth pillars, and we talked about, which is the transport, and which is mobility. The second is about connectivity and communications. And third is about sustainability, energy and utilities and mining. And the fourth is about new growth areas, which include essentially healthcare, medical devices, and the semiconductor part. So we said we are going to really create a balanced portfolio supported by the three horizontals with a technology and AI-led future. I think that's how we are really pivoting the company for this decade.
So it's very evident that you have your future roadmap pretty much charted out. Let's talk about a little bit more of the near term. You clocked an EBIT margin of 16.5%. How do you think you're going to sustain this operational profitability over the next 6 months? Have you given out wage hikes this quarter, sir?
Yeah, so we have kind of distributed the wage hikes. I would say about 2/3 of the wage hikes were already given out before Q2. It started from Q1, and this biggest chunk has been distributed in Q2. We have some more left to be done between Q3 and Q4. And we also have our operating levers, and which is in the form of automation, utilization, offshoring, and along with automation. I think you do see that these are four levers that we are really betting on. Apart from pricing, and we still saw a robust price hike over the last 12, 18 months. And because of the higher inflation in most of the developed countries, and the customers do appreciate the support they need to extend to us. And we do hope that would act as a fifth lever for us to really expand on our margin. And having said that, there could still be some headwinds that we need to get prepared for, and which is led by some of the investment that we are making on the technology future that I talked about. And we are also trying to double down on the front end sales and solution investments led by technology and digital teams. We want to be a digital and technology advisor for our customers, and we are doubling down on some of the areas of investment. So, given balancing out, our intent is to improve our margin over a period of time, but we are also conscious of the fact that where we need to invest, we want to make sure that we do the right investments.
Okay. You also mentioned, finally, my last question to you is, you also mentioned that you see the second half of the year as stronger than the first half of the year for you. Where would you want to end the year as far as revenue growth is concerned? Have you had any targets set for you?
I think we have said we would like to be at the lower end of our guidance, and we still didn't want
That
to
would
revise
be
our
exactly,
guidance.
if you can specify.
Around 15% constant currency year-on-year growth.
So, okay. Okay, thank you. All right. So, Mr. Natarajan, thank you so much for chatting with us today. Quite an insightful chat. Thank you, viewers, for tuning in. This is Tushar for BQ Prime.
Thank you.